Good morning, friends. I have been thinking about a comparison between India and a Bollywood movie. Whenever you look at India from the perspective of a photograph, India always looks very challenging. There is something is wrong here, something is wrong there, this can be better, there is some crisis in some part of the country, and on a photograph, India always looks quite challenging. But we've all gone through a Bollywood movie. There is tension, there is romance, there is adventure. But finally, as you go through the movie, normally the movie has a happy ending. And I think the India story is like that of a Bollywood movie, which as a photograph looks challenging, but over time is a wonderful movie. But let me caution you, friends, nowadays I also see many Bollywood producers who are ready to have an ending different from a happy ending. And it is for this, ladies and gentlemen, all of us, as we think and plan our lives and the lives of our customers, we must always be prepared to see that in case the producer decides that the ending is not happy, how well are we prepared to ensure that we've done good risk management and planning for all our customers. And therefore, friends, on this note of a very high probability of a happy ending, but planning risk in case the ending is not so good is the core of what we in this financial sector need to be at all points of time. And friends, I actually do believe that India is at a cusp which has the ability of transforming us and our future to a completely different plane from what we have ever seen before. And at the same time, like the photograph at a point of time, it comes with its present transitional challenges as well. But any transformation, friends, always comes with the challenges of transition. And when I think about the India story, there is a lot of noise, things are slowing down, this and that and the other. Yes, of course, there is friction at a point of time. But when, as I said, if you look at the current areas of potential friction which we are going through, are essentially around three transformative changes. Change number one is GST. And GST is coming with its frictional transition changes. Fundamentally transformative, but short-term pangs. The Insolvency and Bankruptcy Code. For the first time, we're going to see a serious flow of companies which have either underperformed or have not done the right thing by its savers and investors actually go out of business. But IBC, as it is called, is also creating short-term frictional changes, but a fundamental transformative change. And third, of course, for some of you who have exposure to real estate, the real estate sector is going through its own challenges coming out of RERA. So when you think about these three major transitional changes, like India in a photograph, it does look challenging. But I do believe that as India navigates through this short-term frictions, the transformation of the country is well on its way. And I look at India as an entrepreneur who started his career in 1985-86, more than 30 years ago, with very little capital and a dream to make India happen in some way and for us to take a positioning in the financial services industry. And we at Kotak in many ways are a product of India's financial sector reform. And as a part of that journey, friends, I've always found the photograph to be challenging, but the movie extremely exhilarating. And I do believe that the journey ahead for India and Indian financial sector is even more exciting and exhilarating than it has been in the last 30 years of my career. And I often joke with my colleagues in my firm that looking at the opportunity ahead, it is certainly possible for us to produce returns at least equal or better than what we may have done over the last 30 years. And it is with this optimism, friends, that I speak to you here today about changes in the Indian financial services industry, which I understand is the subject of my talk. I think the financial sector in India right now is going through 4 mega trends. And each of these trends have a very serious implication on financial services and India as a country over the next 10 and 20 years. The first major megatrend, friends, is a fundamentally different financial industry structure. If you go through the last 20 or 30 years, India has been primarily a bank-led financial structure, and within that, a public sector banking dominated financial services industry. Therefore, banking itself, a disproportionately large part of the industry, and within that, public sector being a disproportionate part of the banking industry. The stock of public sector savings and advances even now is nearly 70% of the total stock of banking assets. So this, of course, is a very large number. But if you look at the industry structure on a flow basis, it's giving you a completely different picture. And you're seeing public sector banks in particular beginning to lose some of their share. And we are at a point of time where we need to ask ourselves on a first principle basis that there is a fundamental need to restructure the Indian financial sector. And I'm sure the policymakers have been thinking for a long time across the spectrum, and more so now, to how we redefine the future industry structure and the role of public sector banks in that. I do believe that there is a role, but the role has to significantly change from the way we have seen. Because finally, as a country, we owe it to our people for efficient allocation and utilization of resources. And I'll just give one example. If you go back to the very logic of why public sector banking was created in 1969, the logic was private sector was essentially clubby and giving all the monies to private enterprise. And therefore, consumers, small businesses, and others were not getting a fair share of savings. And therefore, public sector was created to diversify lending beyond a few business houses. If you look at the facts today, friends, the bulk of the lending which has created problems for public sector banks is lending to big business. So we had an ideal in 1969 that public sector will help us diversify beyond lending to big business. And here we are more than 40 years later, where similar mistakes have been made and on a much bigger scale and much higher cost to the economy. We need to reverse this. I think the answer for the future is not ownership, it is regulation. And through proper regulation, you create an enterprise which meets social objectives while at the same time not being captive to potential risks and inefficiencies. So a fundamental industry structure change with the role of the public sector banks, which needs to be redefined, is at the core of this big change in the Indian financial sector. And friends, we are in the throes of that change. I am often asked the question, when will this change happen? I wish I knew the answer, but if I was a betting man, I do believe this change should happen sometime after 2019. And please don't ask me why I am saying after 2019. But I do see this as a significant agenda beyond 2019 as we think about our future. But we still have 2 years to go before we get there. And it is this transition phase which is going to be one of the biggest challenges for us to resolve and make sure that the economy is able to grow faster. The next big mega trend, friends, as an extension coming out of a fundamental change is what I call as, we have seen real interest rates in the economy for quite a while. We have seen the government of the day taking lots of steps towards cleaning out black money from the system. The effect of all these policy moves is that financial savings compared to savings in real estate and informal economy are getting a significant kicker. Therefore, formal financial savings is getting a big boost in the last few years, particularly in the last 12 months. And I'm sure most of you would have seen a significant growth in your AUMs of your clients as they allocate much more to the financial services sector. Therefore, a fundamental shift of savings from informal to formal is another mega trend, and I do believe that as long as we keep our interest rates reasonably positive from a real interest rate point of view, and we can debate what should that spread be, because that's an important aspect of this, and as long as we manage our macros well, I think financial stability is an extremely important aspect to ensure that formal financial savings continue to grow. And therefore, if we achieve a stable macro financial environment and have real interest rates which are attractive for savers, I think formal financial savings will have a continuing boost in years and decades to come. So what are the impact of first two changes? And that is my mega trend 3. I mentioned earlier that historically India was a bank-led financial services model. I think this is also changing. Banks for the first time, whether public or private, will now have to get significantly more efficient than they have ever been. And the financial sector in India will move from a banking sector or a dominant banking sector to a broad-based financial services sector. And I, in that context, see a phenomenal opportunity for players across the board, whether it's distribution, asset management, life insurance, equities, securities, and the whole range of the financial gamut. And this transformation of India from a bank-led financial sector to a broader, vibrant financial services industry is one of the most transformative changes we are witnessing in our lives. Never before have Indians seen the full range of the financial umbrella as they will now see. And it is here that this transformation also brings with it a very significant responsibility for all the intermediaries in the sector. Because at the heart of it, it's building trust, building savings of the community for better returns. And therefore, on the macro side, the need for macroeconomic financial stability, and on the micro side, responsible long-term behavior of players in the financial industry to ensure sustained growth of financial savings for a better India. And an efficient allocation of financial savings is a big plus to our economy. And friends, it's here that each of us in the room have a huge responsibility to ensure that this mega trend of formalization of Indian finance combined with a broad-based financial services sector is sustained over a long period of time. Because if we do not for any reason act responsibly, it's extremely easy for policymakers to revert back to the traditional bank-dominant directed business model for financial services. And very few countries in India have made a smooth transition, as India seems to be doing right now, from a bank-led finance model to a financial services industry truly broad-based and vibrant. And fourth, friends, the fourth major mega trend which I see in our lives, and this is different. It's extremely positive at the one end, but extremely challenging at the other. It is the new world of digital, of a transformative technology and disruptive change, which is changing our lives like never before. And you just have to sit back and ask the question, that how are we positioned in this new world as efficient players. And just look at the last 10 years. 4 of the 5 biggest companies in the world have essentially become big in the last 10 years. Some of them barely existed 10 years ago. And each of these companies are with market caps of more than $500 billion. So whether it's a Google, Facebook, Amazon, Apple, they have transformed the way we live. And the important aspect of this transformation, friends, is the winner takes all. What they have taken is a disproportionate market, in many ways created the market, and left very little for most other players. And it is this disruptive, transformative change, friends, which is extremely positive for overall productivity and efficiency for savers and borrowers, or investors and issuers. But the role of the intermediary, with the profit pools the intermediaries make today, they are at serious challenge like never before. And it is here, friends, that the operating efficiencies, ability to embrace this change, ability to say that we will be ready to do whatever it takes, including consolidation, is the name of the game. And this disruptive change, friends, I can assure you, is going to have a few winners, but most likely many losers. And the whole distribution profit pool, which has now become a very significant profit pool for most players in the financial intermediation space, will be at serious challenge in the next 3 to 5 years. But on the other hand, it will dramatically empower the B2C model, direct between business and consumers. And it will fundamentally change the economics of the game. And if a WhatsApp can have the largest customer base probably in the world and not charge, why should most of us in the intermediation business we are in be allowed the luxury of the kind of profit pools we currently do? And it is this change, friends, which will require each of us to be able to cannibalize and disrupt our own business model before somebody else does. And at the same time, you have a huge opportunity of a 1.2 billion population to reach out to you as potential customers, and at a fraction of the cost to what we are currently incurring. And in this digital journey, friends, in many ways in India, we are also enabled by a dramatic change which is due to Aadhaar. And the combination of digital and Aadhaar, and I know there are issues about privacy which have been raised from time to time, but I don't see the same kind of questions being raised on privacy when we talk about our data with Google or a Facebook. We just seem to be much more focused on privacy issues when it comes to Aadhaar. And therefore, this combination of digital with Aadhaar is transforming lives. We have seen it in our own micro case in banking, how thanks to digital and Aadhaar, we are able to open accounts for customers in about 3 to 4 minutes. And this is something which otherwise took 3 to 4 days, and at a cost which is a fraction of the cost which it takes us in the real world. And this change is going to happen to each of us, where your costs for business will have to dramatically drop because the profit pools will be under huge pressure. And do it early, be there, be a part of the change rather than wonder what happened. And in the end, friends, when I think about the Indian story, I genuinely feel like a person who sees the future as something like that this is a tide in the lives of men which, captured at the flood, can lead to prosperity and fortune. But fortune and prosperity need not be as well spread as most of us would like. And this is a broader issue, distribution within industry, and more importantly, distribution across the people of the country, which is going to be one of the biggest challenges in the future landscape of India. but I do feel excited, enthralled, and I can assure you, I feel even more excited today than I did 32 years ago when I started my career. And I wish this function and Morningstar and all of you a wonderful 2 days, and delighted to be here. Thank you very much.